Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up every...
Hello, traders. Gary Wagner here. It is approximately 11:20 in Honolulu, Hawaii. It is the 21st day of July, Thursday, and this is the daily report for gold. We do have gold trading under pressure. It is trading well off the lows, but it is still down currently about $11 to $12. Current print 1589.51. We can look at that easiest through this 240-minute chart. As you see, we have our 240-minute Henkin chart up. I will convert that into a candlestick in a second. But what I am noticing is this latest correction, this latest sell-off here that we're looking at. It starts typically as we would normally see a sell-off start. You get that turning candle, that doji candle. There's the green. The green goes to red here. But unlike a strong trend, and let me kind of find an example of that. Typically, after a strong trend, you get very quickly some large body sizes come into the market. You can see that here. You can see that here. You can see that here. And we're not getting that. We're getting some rather small bodies. Now, we are getting an absence of tails in this one particular area. But it is my belief, and looking at the market as we stand, it is my belief that we're probably going to be looking at the market attempting a double bottom if it already has it. Now, if this low remains, this low right in here, then in fact it's close to a double bottom, but the fact that we have a higher low is significant. My sentiment is this. My belief is when we hit major benchmarks like 1600, as I said in my Kitco article on Monday, you're typically not going to see that price become support in one battle. That's the way that I put it. You're not going to see that happen. So we had the first attempt at the high. We took that high out, went to about 1610. The market came down. When it came back up, it has made a lower high, and that's the only thing that I want to watch very, very closely, but it did have the ability to go over 1600. And in fact, in last night's trading, we also saw the market go to 1600. So my sentiment is right now we are forming a base within the area of 1580 and 1600. And my belief is that this market is going to go higher, but it will form its base here first. The next chart that I want to look at today is we've gone to our 360-minute chart. This 60-minute chart, of course, contains our Elliott wave count, our current Elliott wave count. I do have a Fibonacci retracement. It's a very simple Fibonacci retracement that I'm simply running from the beginning of this tremendous rally up till the top. And as you can see, we talked about this yesterday, 1579. This has been the low, and it appears as though it has formed a base or a bottom, some support in that area. Now, there are a couple of things that I'm noticing, and what I am noticing is this. When we take a look at the particulars of the trading activity, and I'm speaking about these recent lows here, as well as these two highs here. Now, this is our first time we took out $1,600. It takes it out very nicely. It retraces 23%. It comes up, but it does make a lower high. When it comes down, it makes a higher low. Now, when you consider what that means is that you've got a market that is in a state of compression. Because simply put, if we take and draw support and resistance, what you see is that pennant formation. Now, in essence, what we look for in that flag or pennant is typically, as the market compresses, it builds energy. When it reaches the apex, there is a breakout. The breakout is generally to the prevalent or predominant side of the trend that is up. So it's another reason that I'm still very, very bullish on this market. Fundamentally, I'm extremely bullish, and technically, we might in fact see this market break and break fairly hard to the upside. Now, when we move to our daily chart, and this, of course, is 1440 in terms of the minutes, but it is a daily chart, and this is where we have our extensions rather than our retracements, and that's why this same area, rather than it being 38, rather than it being 23, is 38, because in the retracement, I am going from bottom to top and top to bottom in the other. So that's really the reason, but they're the same target area. And in here you can see that same type of activity on a daily chart. This, of course, is in Henkin format. When we go ahead and convert that back into our daily chart, and we do that simply by removing this technical indicator, you will see this alternating candle pattern that we're getting. And most importantly, you'll see that it has formed a consolidating base in between these two areas, and you can see on this last trading day or activity what we have experienced today, what we are seeing is the fact that we are getting the marketplace consolidating in that pennant formation. So it's absolutely still my belief that as this market consolidates, it needs to be able to form a base above 1600. It's a major landmark. And as I said, I don't believe that's going to happen overnight, but I absolutely believe that it will happen. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.